Welcome to everybody for the Monday webinar. I hope everybody had a great weekend. There's lots to talk about today. We're going to have lots to trade today. There's just lots and lots of lotsness going on. Markets have been pretty active. They've been pretty active, so we have a lot to talk about. Remember, you can see how we do things from day to day by going to daytradersfx.com/join and getting set up with our live trade group. And getting that all going. So we'd love to have you. Again, you can get a free trial, no obligation, no nothing. Just log in and join us and see what you think. Trade the week with us. I always like to remind everybody on Mondays so you can get a full week of free trialness going and kind of get that all worked out. Susan, yes, I will probably have a few minutes this week to chat for sure, get you squared away on some broker details. Okay, guys, so we have an interesting week ahead. We have some interesting things to look at, to talk about. We've seen a lot of movement from the last several days when we had the FOMC statement. Just so much to say, so much to say. Bo needs therapy from the Aussie New Zealand. I cannot blame you 1 second on that. That Aussie New Zealand man has been just craziness, and we're going to talk about it. We've got some good trading opportunities coming. This week is not a hugely... Yeah, Linda, you told me some Aussie New Zealand stories that were pretty wild too. Yeah, that pair has been just unruly to say the least, and we've got some good things to be looking for there. Okay. As far as the week goes, we've got we don't have any really major news announcements. It's actually not a huge week, which is kind of good because I need to catch my breath. Last week was wild, crazy. U.S. markets were up and down and just all over the place, and it was totally nuts. So as far as this week goes, Tuesday we've got some CPI numbers and some trade balance, some U.S. Canadian news. It's just a nice amount to hopefully get the markets wiggling a little bit. Durable goods orders on Wednesday, and that's a nice little move there. Thursday we've got some good stuff going on. A little speech from Bank of Canada. We'll see how that goes. On Friday we've got Carney speaking, which will either be absolutely nothing and not a single thing will move, or we'll see the pound move 18,000 pips. So just be ready for that. We'll be keeping an eye on that on Friday. Some GDP numbers for the U.S. Yellen will be speaking. And then we get some more daylight savings activity. So for all the UK and European folk, you can start looking for some different time zone stuff coming up. And that'll be exciting as well. Okay, so much to talk about. Did anyone see this whole situation right here? Hey, euro dollar, I'm going to come off these lows, and it looks really tame on this daily chart, right? And everything looks, like, we had a little move up, and then it pulled back a little bit, and whatever, who cares? Well, the euro dollar had a low and a high of almost 600 pips over a 3-day period, 4-day period. Pretty big move for the euro dollar, and actually most of that happened all in just a couple of hours. We saw the euro dollar spike up about 450 pips on the FOMC statement. Now, the one thing that I wanted to talk to everybody about is what does this all mean? Is the FOMC statement, what does this mean? The U.S. is still closer to hiking rates than probably most of the other central banks. So what then? We are huge central bank watchers. We like to just see what the interest rates are doing and see what central bankers are doing and try to follow that trend. And it's been pretty wild and crazy lately. The U.S. has been hugely anticipating a rate hike like middle of the year, right? We've heard a lot of talk about, June, maybe September. Well, this most recent FOMC statement kind of put things off just a little bit, potentially a lot of it. We don't know yet, but the market, the U.S. dollar has been rallying on that anticipation a huge amount, while all the rest of the central banks are pulling back saying we're definitely not raising rates, or we're even cutting rates. The U.S. has said we're ready to raise rates. We're kind of ready to raise rates. And then after last week, we're sort of ready to raise rates, depending on how data looks. So there's a possibility that the rate hike has been put off even until early next year. Who knows? Who knows? There's still pretty big anticipation that it could happen slightly later this year. But with such a big rally in anticipation of the U.S. dollar getting a rate hike, or the U.S. getting a rate hike, the rally in the U.S. dollar has been very, very strong. And now there's been almost a repricing of such, meaning that that big rally might have been a little overstated. You know, the market, we saw the US dollar. Look at this euro, for example. Since about August or September of last year, the euro kind of topped out. The euro in actually May of last year, the euro was just shy of 140. A little less than a year ago, and it's dropped 3,500 pips in about a year. That's a pretty big movement for the euro. Pretty much the last time we saw that kind of big steady movement. We didn't even see that big of a movement in the 2007-8 situation. Well, we saw about the same movement, just about the same movement with the massive credit crunch, disaster. Well, we've just seen that same movement on the euro dollar over a slightly longer period, but it's just been dropping and dropping, and the floor has literally fallen out from under the euro. But now as we look at this, we see that the Fed is getting a little bit more cautious. They're making things a little bit more data dependent. What are the labor markets doing? And we'll kind of base everything on that and blah, blah, blah. So here's my take. That's part of it, and that's taken the pressure off of this dollar rally a good little bit. And we've seen a bit of a corrective move here, number one. Number two, you guys have heard me talk in detail many times, and some of you actually have not heard me talk about this, but we are right at that time where pre-summer movements start to take place. And this is something that we always have to keep an eye on. And it happens right about now. Sometimes it'll start in April, and usually the very latest is like the very first day of May. But sometime in this little period, we get that big pre-summer movement, which more often than not, like 80% of the time, is a reversal of whatever the previous trend has been. And obviously the previous trend on the euro dollar and on everything else has been dollar strength, dollar strength, dollar strength. And so now we're coming into this pre-summer movement time where again we get some big volatility, we get some big movements. And I am, at least for the moment, now this is going to potentially change week by week, but what I'm going to be looking for this entire week is the fact that we might be at the beginning of the pre-summer movement, and that this big trend that we've seen has been essentially run out, and it's time for some reversals. Now, that doesn't mean that no matter what, I'm buying every single dip on euro dollar and I'm buying every dip on pound dollar and so on, but I'm going to definitely be looking for those dips for opportunities to get in buys, but I'm not like excessively confident that this is, no matter what, I'm going to stay in a trade and ride it out. It's one of those things where we need a really good setup. We need a really confirmed setup. We need some nice breakouts and some nice details like that. But I will be looking to buy dips on euro dollar. For example, we have a 4-hour chart that has not touched the 200 moving average since like 1625, the year 1625. It's been nearly forever. We've gone 409 bars without touching the 200 moving average. This has been a hugely overextended 4-hour chart, and it's actually finally within range of reaching that level. Now, you can see that the 200 moving average is sitting somewhere around the 110.50-ish area. I think that is a safe bet. That's 100 pips up. So I want to be, to start this whole thing off, I want to be looking for opportunities to buy euro dollar down towards this Friday support. Well, it was Friday resistance, and now it's a great little support level. I want to be looking to buy the euro dollar around even a little tiny bit below about 10900, and I'm going to be targeting at the very least about 110.50. And I think my medium-term target for the moment on euro dollar is 11300. I think we're going to get to 11300. That's our monthly pivot, which is very excellent. It's also a 23% fib from the huge move down that we've seen on euro dollar. And there's a good cluster of pivots there, and there's our fib level. So I am totally shooting for 11300, and I'm pretty sure we're going to get there. Now, 11300 is not crazy far away, but if we get a move, if we can get an entry down around 10900 and this thing really starts to take off, it shouldn't be that difficult to make 200 to 300 pips on this move up. Even if you don't stay in it all the way up to 11300, I think we're going to get a nice little run up there. So I think the market's finally going to take a breather, finally going to take a breath from this crazy dollar rally and get a little bit of pullback. Now, we have a pretty massively extended 200 moving average on the daily chart on euro dollar as well, and that's all the way up at about 120. Now, I don't know if we're ever going to see 120 on the euro again. We probably will, but it will probably be quite a ways out there. I'm not necessarily going to be aiming for that anytime soon, but I think 113 is a great target after a little bit of a dip down around or even a little bit below 10900. On euro dollar. So I'm looking for that for the moment. Again, I'm not super long-term bearish US dollar, but I think at least this week I'm going to be looking for that. And I'm going to be looking for an opportunity to kind of take advantage of some of the dollar correction that has just gone so overextended for this amount of time. So that's kind of what we're looking for at the moment. Somebody is unhappy out there. I don't know who that is. So anyways, that's euro dollar. That's the take for the moment. That's what we're looking for. So let's buy some dips on this pair and let's see where this thing goes and kind of how it plays out. So be ready for that. That's kind of first and foremost at this point. Buying dips on euro dollar, looking for 11300. Next, we have a little bit of pound dollar activity, and I just basically, I do want to buy dips on the pound dollar, but I'm more interested in buying about the 150 break and beyond and kind of taking it from there. So let's look at pound dollar and let's kind of see where this thing goes. I'd like to buy some dips just a little bit below 14900. We've got some pretty good support, some pretty nice little levels down here at about 148.30-ish area. But basically just a little dip below 14900 would be a good spot to start looking for some buys. And again, we're not that far away. We're only at about 149.50-60 area. And I think that's going to be a good little spot. The pound dollar is not quite as overextended as the euro dollar. It's taken a nice little move down, but it's got some wiggle room to go still. So basically, if we can get a break of 150, I think that is going to be just a super good area to start getting long on this pair. We've got a nice little falling wedge right here. And again, if we look at all this stuff, like this big move down right here, again, going back to the highs of everything else when the pound dollar was above 170, it's kind of bottomed out here and made a little bit of a move down. And I'm looking for, this is kind of going to be the week of Fibonacci levels. And I'm looking for this 23% fib, which is up around 15200. I think we're going to have a good chance of getting up there. If we break out of this little shorter term falling wedge right here, a move above 150 should get us into 15200 fairly easily. And likewise, a little bit of a dip down here into the 14900 or even a little bit below should be some good spots to pick up some of those buys. So pound dollar looks pretty good. Now, if we start breaking this level, if we get below this area right here, which is 148.30, about 148.30 area, then I will probably start to short this because something will have started to go awry. And we've got about 200 pips to get back into those lows. But I think we're going to hold on to the bullish picture just a little bit on this pound dollar for a while. I think we've got a good chance of breaking that 150 and making a good move from there. So I'm going to be looking for that long above 150 or buying some dips as long as we can stay above about 148.30 area. And again, with euro dollar, I'm trying to trade euro dollar up into about the 23% fib. Pound dollar, I'd like to trade the pound dollar up into the 23% fib as well. I think these are all great spots. We take out some nice missed pivots along the way and should see some pretty good movement getting there. So that's what I'm going to be looking for on those two pairs in particular. And that's a good question, Linda. I'm definitely not looking at shorting anything down to 14900 just yet. I mean, technically, I guess you could with tight stops above this high, but yeah, I don't know that we have a good enough setup to really start shorting that one down just yet. There's some trend line activity and so on coming in here, and I guess you could keep an eye on that. But yeah, I'm definitely just going to be waiting to buy that dip. And kind of see how it goes. But watch the trend line if you're looking for something short. Anybody that's looking for something short on pound dollar, there's a decent trend line. There's some stuff that can be had there. But keep in mind, this is a pretty choppy zone, and so we want to be a little careful with those breakouts. Okay, so quick little look at Aussie dollar, US dollar, and kind of where this is going. The Aussie dollar has had a pretty huge falling wedge for some time, and it has finally broken out and made a pretty decent move there. The Aussie dollar's got a pretty overextended 200 moving average here on the daily chart, so that makes it pretty nice. Again, if we look at kind of the big moves here, this is that big run down, big Fibonacci levels, big things going on there. Our 23% fib on Aussie dollar is just above the 80 level. It's about 80-20 zone right there. Gives us a couple hundred pips to work with. I'd like to see the Aussie dollar pull back just a little bit as well. We've got some nice support here around 78.50-ish area. And here we are. We're not that far away. We're only 78, about 85.90. So 30 or 40 pips of pullback, and I'd like to buy some Aussie dollar and trade it up into that 80 level. So I think we've got, a good 200 or so pips worth of movement into that upper area there. So I think the Aussie is going to be great for that. Now, long term, of course, who knows what's going to happen? But I'm going to be pretty cautious about that. But for the moment, I'm just buying some dips on Australian dollar and trading it on up through there. So that should be pretty good. So keep an eye on the Aussie. We'll be trading the heck out of that. Some good little areas and levels to be watching for there. Dollar CAD has something excellent. It's a massive rising wedge, which is an excellent reversal pattern. And we've also got a huge double top in place. So to me, that's screaming, let's short the heck out of this thing. We talked about the dollar CAD and the fact that we had this 200 moving average. If we zoom this out just a little bit, the 200 moving average on the dollar CAD touched on that big Fed movement last week. And then the last time it touched was all the way back in November of 2014. I mean, it's been several months, and that's pretty rare on a 4-hour chart to go several months without hitting the 200 moving average. And the dollar CAD did. And this big move down finally got it out and kind of helped that whole thing. But if we look at it on a daily chart, you can see that we have a big, huge rising wedge right here and a huge double top in place. And I pretty much love this setup, and I think that the dollar CAD is going to be good for some serious pips. Now, we got to keep an eye on oil prices. So remember, watch oil prices and make sure that oil is, showing us some weakness. This is a great time, by the way, for any of you that are into kind of market profile, seasonal trading type stuff. We know that oil prices and gas prices and like all that demand goes up as we go into summer, and oil has just kind of bottomed out at about that $43-$44 a barrel area and seems to be holding, and it's actually up a little bit. I forget what oil prices are right this moment. If we look at them here, I think they're the 46, 47, about 47, almost 47.50, which is a pretty nice little recovery for oil. So as oil starts getting above 50 and 55 and all of that stuff, then oil is gonna, or then the dollar CAD should really pick up some momentum and head down through this rising wedge, and specifically through this big support here, which is about 123.50-60 area. We're only about 12500, and I think we've got a good little bit to go. I'm still fairly confident, at least at this point, that the dollar CAD is going to hit at least 120 sometime over the next couple of weeks, probably even potentially this week. I doubt it, but over the next couple of weeks, I think we could see 120 on dollar CAD. So let's be ready for that. Yeah, exactly, Bo. Time to get a gas guzzler. Do what I did and go get an all-wheel drive Land Rover that gets the worst gas mileage on the planet, and enjoy that because I apparently need to get my head checked. I need to get something electric with some solar panels on it so I can stop going broke at the gas pump. This is a nice little mover here. Let's be ready to trade that break, and we're looking for 120 on dollar CAD. I'd like to sell any rallies, and I definitely want to sell some breaks. Breaks of the trend line, breaks of this big support about 123.60-70, all of that stuff. I want to be selling those breaks and trading this down towards 120. For the interest of time, there's some stuff on EuroCAD and dollar Swiss franc, but they're not super high on my list at this point. But the Aussie New Zealand, some of you have been losing your mind trading this pair, and you definitely are in good company because the Aussie New Zealand has been totally crazy nuts. And the big question is, that's on everybody's mind is, are we headed to parity, which is not that far away, a little less than 300 pips away, 287 pips away, and we'll be at parity with Aussie and New Zealand. A lot of people are very convinced that that's happening, and I think that it is very, very possible that we head to parity on this pair. However, we're going to kind of be watching a couple of things. Number one, we have a huge falling wedge right here. And if these lows can even hold just a little bit, they don't have to hold massively. If they can hold a little bit, if we can stay above about 10200 area, and we can, consolidate and see that break back up above, 103.50 zone, give or take, then I'm looking for this big, massive low to hold. But so far, what we have is New Zealand is the central bank is staying pretty quiet about everything. They're just kind of letting the market take its toll. They're not really doing anything. They're talking a little tiny bit about interest rates, but they're definitely not doing anything. Australia has lowered rates, and they basically alluded to the fact that they'll lower rates again. So the sell pressure is still on the Aussie New Zealand pair, and we probably will see parity coming up here. But we're watching this, and we're looking at this price pattern. We know that we have so many great missed pivots up here, and we've got a nice setup on the daily chart, and a lot of reasons to believe that this still can hold, and it still will make its way up there. So I'm going to be looking for both things. I'm going to be looking to buy dips. I'm going to be looking to sell rallies. I'm just looking for everything on this Aussie New Zealand. But first and foremost, we can definitely see a nice price pattern that we can work with. But if we continue to break lows, let's not fight the trend, and let's look for opportunities to sell those rallies on Aussie New Zealand. So that's what we're looking for there. Just quickly here, just super quick, I love the dollar peso as of current. It's run way up and it's run way back down again, and it's kind of all over the place. I think the dollar peso is potentially working on a massive head and shoulders pattern. Big shoulder here, nice head there, probably going to bounce around here. To get into some of this neckline activity, it would need to move down into the 14.40 area, and here we are at about 14.92, give or take. I'm looking for this dollar peso. I'm definitely going to be short below 14.82. If we get below that, I'm absolutely short on this pair, and we'll be just trading it down to the moving average, to all of these levels down here, and hopefully getting some hundreds of pips out of it. I would like to short some rallies as well, so if this runs up just a little bit, especially up above 1500, I'm going to be looking to short that one as well with a nice price pattern, and trading it down to some of those missed pivots, moving averages. There's a huge wedge that's breaking out. A lot of things are definitely pointing towards big shorts coming up on dollar Mexican peso. So we'll be ready for that. Ready for some moves. We've got our gold trade played out super awesome. We talked about last week was just a nice little simple bull flag, and it moved very nicely. And we've got a lot of other pairs to talk about. New Zealand dollar is looking very, very good. Huge double bottom in place. We're going to be playing that as well. New Zealand dollar is due for a massive recovery. New Zealand dollar has moved above the 23% fib, which was at 75. Just a little bit above 75.50. So I do want to get long New Zealand dollar after a little bit of retracement. So again, our 23% fib is 75.67, and our 38 is up at 7,800. So we've got, from current market price, we've got about 150 pips, and if we can get a little more retracement, we should have about a 200 pip move up into that 38% fib, which puts us in a lot of resistance and consolidation, and up at that 200 moving average and everything. It just looks so good pretty much everywhere. So any little dips, we want to buy the New Zealand dollar. And Tom, yeah, so we're right on the same page there. So yep, absolutely, great comment. I love the New Zealand dollar. I think it's going to be so great. So let's look for some opportunities to buy dips. 7,600 would be great. Below 7,600 would be even better. And let's trade this up to that 38% fib, which is just about 7,800, and the 200 moving average and everything. That's a beautiful double bottom, super great there. So that's going to be a nice trade. So we've got a lot of things in the works. A lot of trades are moving around. Lots of activity. We're going to be looking at Aussie pairs quite a bit this week, and lots of dollar pairs, and just lots of everything. So be ready for that. Questions, comments, let me know. But I'm super excited about this week of trading. I think we've got some really excellent setups in the works. And I will post this video, and then for members, I will post a watch list with some very specific entries and ideas. And then obviously we've got a lot of group trades coming as well. So that's all going to be super exciting. Very much looking forward to it. Best of luck, everybody, and thanks for joining us. And I'd love to take any questions or any comments. I'm just going to get this video posted, and I will take any questions you guys have about anything.